Everyone at 30,500 was like, this is a new bull market. Crypto to the moon, crypto to a million, whatever it is. Alt season was going to come. I mean, I'm still waiting for the alt season. I think most of us out there are. But the point again here is that you have to understand the way markets work is all based on this. When you look at millions of investors and psychologically, are they greedy? Are they FOMOing in? Are they fearful? Are they panicking? Right? Panic doesn't denote the beginning of a sell-off. It denotes the end.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway giving us his market outlook and prediction for Bitcoin and where the crypto market is headed in the coming weeks. With stablecoins now accounting for a significant 18% of the entire market, Soloway observes that the current sentiment is largely bearish, with investors cautiously watching to see what the next few weeks will bring. As the SEC continues to wage war against crypto with its lawsuits of Binance and Coinbase, we could be looking at a significant correction sooner than most think. Drawing comparisons to Bitcoin's behavior in 2013 and 2018, Soloway predicts a significant market bounce after the Fed implements rate cuts. Given the current level of uncertainty, he acknowledges that 2023 has been marked by choppy and volatile phases, setting the stage for what lies ahead. Let's get right into the latest interview and update with Gareth Soloway. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
So if we go to crypto, here's your Bitcoin chart. Bitcoin continues to hold my key support level here of around 25,700. This is still bearish consolidation. I still expect more downside. Target remains, and I've said this now for multiple weeks, you're looking at major support at 24,000. Now, the narrative here with crypto is nasty right now, and you can see it. I mean, this is the market where crypto should be ripping. When you see Nvidia going up every day, when you see Tesla going up every day, think about 2021. Those were the stocks that were leading the charge there, but you had altcoins going up insane. You had Bitcoin, you had Ethereum running up, and they're doing nothing. All right, why is this? Thank you, SEC. Thank you, Gary Gensler. You have put the cap here based on so many uncertainties, whether it's with Binance and what the heck's going on there. Who knows even what's going on there? Now, again, where is Bitcoin going? Well, one of the things we can see is that Bitcoin has done virtually the same thing that the 1929 market did with the collapse. This market in the NASDAQ has done, which every market has done, guys. When you see a decline of this magnitude, you're going to get a technical bounce. Think about FTX. When FTX came out and that collapse occurred, that was the end of that initial down move before the bounce. That was max fear. We're now getting into the beginnings, in my opinion, of the next wave. I don't think we're at max fear yet. I think you're still going to see more actions by the SEC, so there's probably more downside to go. Now, will Bitcoin take out the lows? I don't know. We're going to find out. I'm still in the camp that it could. All right, if you look at the dot-com market, and again, dot-com market's so similar to what happened in crypto. Brand new technology will change the world. .com, the internet, brand new technology will change the world and did. I think Bitcoin and crypto will change the world and is changing the world. It's just going through growing pains. I don't look at things in a FOMOing greed or fear mentality. I analyze that and I analyze other people's emotion because it gives me an edge. I say, people are getting way too scared here. Let me go to the charts and start looking for technical support. Or at 30,500, wait a minute. The amount of greed that's in crypto right now is as robust as we were when we were at 69,000. If that denoted a top at 69,000 on Bitcoin, then it probably also can mirror a top here. And what happens? Bitcoin comes back in. It was also a major technical level as seen in the chart right here. If you're someone who's following, the latest influencers, you're going to lose money. It's guaranteed. I will guarantee it. Now, a couple times you'll make money because that's just the nature of it, but over the long term, you will lose. You need to learn charts and you need to learn human psychology. Now, we are in a market that is a melt-up market. What does that mean? Well, it means shorts are getting scared, the bulls are gaining traction, they're getting very virulent, they're feeling like they can't lose, and again, that is causing a melt-up in the markets. There was money on the sidelines that was kind of concerned about what the Fed was doing. Now we're hearing that today, likely we will see a pause from the Federal Reserve. Now, based on the Fed funds futures, That's exactly what we're expecting. So again, look for the Fed to pause today. Now, I will say this. I personally don't believe that the Fed is happy with the major moves, the melt-ups in some stocks. If you look at NVIDIA, Apple, Microsoft, AMD, I mean, heck, you can go to Tesla. All of these stocks are making massive moves to the upside. So while the Fed is fighting inflation on one hand and wants to continue to bring inflation down, we have a melt-up in the stock market while the crypto markets are being left for dead. But the key here, again, is understanding that the Fed probably isn't happy, because what happens when the stock market goes up as much as it has, and the NASDAQ, for instance, is up something like 20% in the last 6 weeks. All right, when they see that, they realize the investors, the public, feel like they have more money. When they have more money, they're more likely to go buy a new dishwasher, a new car, a new oven, a new TV, and that creates additional demand. What do we know about when you have demand being stronger? The supply and demand curve, if you have demand higher, it's going to mean supply is less, which drives prices up. So the Fed in general wants asset prices to stay where they are or go a little bit lower. Now, they don't want the stock market to crash, right? That's not in their cards, but they don't want it to run back to all-time highs, because again, that will create a hardship for the Fed to bring down inflation. All right, so let's get to the PPI numbers today. Remember, CPI yesterday stands for Consumer Price Index, so it's inflation on the consumer side. So right now we're looking at 4% on the consumer side. If you look at just core, which is food and energy, it's at 5.3%. So let's be fair. Core inflation is what affects Americans the most, right? The middle class, the lower income. Food and energy is a majority of what we spend money on, including rents. Rents can also be included in there as well. We know how crazy rents are. We know how crazy home prices are, especially with interest rates where they are. So the stuff that the average American spends money on continues to go up substantially, while everything else is calming down at a 4% inflation clip. It doesn't mean prices are going down. It means prices are going up less. So they're still going up. So we're still at 4% overall and 5.3% on food and energy. And that means that every year you're paying 4 to 5.3% more for everything. So it's going to cost you more, just the nature of it. Unless we get inflation to go to zero, prices are always going to go up. Bringing inflation from 9 to 5 or 4 or even down to 3 is relatively easy. What's not easy is getting it from, let's say, 3.5 to 2% where the Fed wants it. And my guess is, and you can quote me on this, you can save this clip, is that we will get in a scenario where they get inflation to, let's say, 3%, and it becomes sticky. And the economy starts to trigger a recession. And the recession starts to get worse and worse and worse. And ultimately, what you'll end up seeing is that the Fed will say, oh, well, we now have 7% unemployment, 3% inflation. Which one's the worst scenario here?
Soloway notes that in altcoin seasons, everyone anticipates the rally and starts buying. But when the price fails to rise despite widespread optimism, it indicates a lack of investor participation and results in a stagnant market. Soloway shares his cautiousness recently while trading when crypto prices have become oversold, how he strategically uses dollar cost averaging down into negative positions. He says this approach lowers the average entry price and increases potential profits when a bounce occurs. He believes the coming altcoin season will be directly impacted by regulatory uncertainty in the crypto market, setting the stage for a choppy second half of 2023. What do you think about Gareth Soloway's prediction for Bitcoin and the crypto market in the coming weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.